Hey everyone, it's your bestie Sheila, your favorite realtor. Today we have Ken Byrne with First Heritage Mortgage talking about the 2-1 buy down program. It's been around for a while actually, but hasn't been used because rates have been so great for the past 2 years. But now that the rates have gone up or are actually back to normal, the 2-1 buy down is a great program for buyers to consider when buying their home. So please watch and enjoy. Hello, Kenneth. How are you?
Oh, Sheila, just fine.
Okay. So, now I guess we'll just be talking about your 2-1 buy down that we discussed earlier.
It's not new. They were around back in the 90s when I first got into business.
Oh, really? Yeah, I think I heard that.
Yeah. The thing about it is nobody really did them because rates were low.
Yeah.
And when we did them back then, you qualified at the bought down rate. So people were using them because rates were so high, and then they could qualify at the rate that's lower. And then the theory was your income grows into it. So we were qualifying people better. Now, because of how the finance industry is, we have to qualify everybody at the note rate.
So right now, as of today, what's the rates at for like a conventional?
Probably 7.25-ish.
7.25. Do you foresee it going up further?
I don't know. We've been actually fairly stable for the past couple of weeks. Goes up a little bit, comes down a little bit. This week's been pretty good. Yeah. The thing about it is people keep saying, oh, rates are going to come down, but what are they going to come down from? Are they going to come down from right here? Or are they going to come down from 7.75 and we still have some room to go? I think that's the big thing that the banks are worried about. And that's why we don't see a lot of rates with no points, because the banks know that as soon as rates drop, they're going to get runoff from all those loans that are done. Say you're doing a 7.5% with no point rate and rates drop to 6.75. Every one of those 7.5s is getting refinanced. So the banks are very leery about doing rates with no points. That's why you're seeing everybody charge points, because we just don't have interest rates with no points a lot of times now.
So how many points would someone have to pay to get a rate now?
Well, let's just say 7.25 is zero. And it used to be 1 point was every 0.25% in rate. Now, because the banks are looking at it that they want to hold on to their loans, we've got some investors that are going to give you, if the rate's 7.25, you might be able to get 6.75 with 1 point and 6.5 with 2 points. So they're willing to discount the rate by paying points, because they know, hey, you know what? If I give a 6.5% rate now with 2.5 points, let's just say, yes, that's cheaper than it should be. But if rates drop, I'm not getting my loan refinanced. So then they can budget in and assume they're going to keep that loan for a longer period of time. Whereas a bank that says, well, I'm going to do 7.25, no points, if rates drop to 6.5, it's gone. Whereas the other guy, well, I still have my loan and I made the 2 points up front. So there's a lot of credit unions are doing rates with points, and they're discounting them quite a bit in order to get the customer and then keep the customer. And the buy downs are additional costs on top of points. You can get your rate down one or two ways. You can take a 0-point quote and pay points to get it lower and get a rate that stays wherever it is for however long your loan is. Or you can do the 2-1 buy down and you pay points. They're called buy down subsidy at that point, but you're buying your rate down 2% from the note rate. So if you look at an example of, hey, I can give you 7.25, no points, or 6.5 and 2. But if you do a buy down, I can get you 5.25 if you pay me 2 points. And then next year your rate goes to 6.25, which is still better than the 6.5. And then year 3, you're going to be at 7.25 for the rest of the term of the loan. But the thinking right now is within that 3 years, rates are going to drop enough for you to refi.
Yeah.
So why not? And the hard part is the seller or builder is the only people that can pay it. The buyer can't subsidize it himself.
they pay the closing costs for them. So they take that 2.5 and use that towards buying down the rate instead of closing costs, because that's already covered.
Right.
And
So they
then
may,
what I also say is, you to our buyers, is match that 2.5 or part of it, so that you can, maybe even possibly buy down even more, or, pay towards the points or whatever. So
right. So what you need to ask them is say, hey, if rates are 7.25 and you're going to pay 2.5 points and get this isn't the real rate, it's just an example rate, but you're going to get 6.5 by paying those 2 points. You think rates are going to come down? And inevitably everybody's going to say, yeah, I think rates are going to come down. And then you say, well, if rates come down, are you going to refinance? And they're going to say yes. It's like, so why not do that same 2.5 points and start out at 5.25 instead of at 6.5? And then next year you're at 6.25. So now you've got a better payment for 2 years, and you were going to refi anyway. So now you refi then.
Yeah.
In this case, you don't refi and the rate only goes to 7.25, but you've had 2 years of better rates. So your break even is 5 years on that. So it's not until year 5 where you've spent more money by having that higher rate. And at that point, rates will be lower.
Sure. No, and do you see a lot of pushback when you bring up the 2-1 buy down loan program, or are people getting it and they're like, oh, this is actually really great? Or do you find yourself having to explain it? Because
a lot of people think it's a gimmick.
A lot of people think it's a gimmick, but you tell them that this was actually around a long time ago. This isn't anything new.
It's been around forever. It never went away. It's just we never used it because we never needed to. I mean, probably because people never wanted to pay points. We did somebody somewhere did a really good job of making people think that paying points on a loan is a bad thing. But my thinking is, if you're doing a 30-year fixed rate loan and you can break even in 4 years by paying points, why are you not paying as many as you can afford? And if you're not going to pay points on a 30-year fixed rate loan, then why are you doing a 30-year fixed? Why are you not doing a 5-year ARM?
Sure.
So if you think you're going to do a loan that's a long-term loan and your break even is 5 years, then you should be paying points, because after 5 years, you're in a better position. So the thinking still is the realtor has to be on board with it, and the seller has to pay it.
Yeah, I don't foresee there being issues with sellers wanting to pay for that, because a lot of these homes are just sitting and sitting and sitting. And if you get a smart enough realtor who can actually explain this type of loan program to a buyer, and you already have a seller who's willing to pay 2.5 points just to get the deal done, then it's a no-brainer. And I would definitely, if I was buying a house right now, that's definitely a program I would definitely consider, because it makes sense. Yeah. And what's the likelihood of rates going down in 48 months? And honestly, though, just to be, at the rates that they're at right now, that's normal. We've just had really, really low rates for the last several years.
Right.
People think, 2.5% is normal, but that's not. That was just unbelievably low.
Right. We had 2 years of COVID rates, and now everybody thinks that those are where rates are supposed to be. And honestly, I don't think we're ever going to see them again. So why are you can't sit around and wait. I'm going to wait for 3% to come back. You're never going to buy a house, because we never had 3% before. So when you do a statistical analysis, you always throw out the high and the low. So you got to throw out those last 2 years, because they're not likely to ever happen again. And if you've got a seller who's trying to sell their house, it might make sense to them to offer that money instead of reducing the price of the house. Saying because if you reduce the price of the house $10,000 and somebody's putting 20% down, 20% of $10,000 is what, $2,000? So it's only saving them $2,000 out of pocket, and $60 a month in payment. Well, if I can use that same $10,000 and lop off $400 a month in my mortgage payment by doing a buy down, doesn't that make more sense than trying to save $10,000 on the price of the house? So that's kind of how you have to tell your sellers, because a lot of sellers don't want to pay. I'm not giving any money to the people who want to buy my house. I've heard somebody say, well, if you want to sell your house, either you reduce the price 10 grand and you walk away with a net, or you give somebody 10 grand, you walk away with the same net, but now you sold your house and the person buying your house is going, whoa, I'm in at 5.25%. And the guy down the street is getting 7.25 because he didn't have a lender and a realtor who understood that there was other loans out there. He's trying to put me in an arm or something like that. So it also gives you a stability of knowing that, yes, the rates are going to go up, but they're going to stop at 7.25. Whereas the arm, if you look at it, if you're afraid the rates are going to go up even more, if you do an arm and then rates are higher when your arm adjusts, you can't refi to something better. You're going to adjust higher.
Yeah, and I think with arms though, they're 10 years, right?
You can do 5, 7, 10.
So, do you actually think that the rates will be going down in 48 months though?
In 4 to 8 months?
48 months.
In 4 years? Yeah.
Now, let's say let's say a buyer does a 2-1 buy down and the rates go down within the first year, they can still refi, right?
Mm-hmm.
Okay.
You can refi whenever you want.
Cool. So anything else you want to let the folks know about this market currently outside of this great 2-1 buy down program that's been around? Is there anything else, any other programs that we should be aware of?
You can do a 1-0 buy down too.
A what?
1-0 buy down.
What's a 1-0 buy down?
It's the same theory as a 2-1 buy down, but instead of paying your rate down 2% for the first year and then 1% the second year, you're basically paying your rate down 1% for 1 year. So that same scenario, instead of at 7.25, you're at 6.25 for a year. And then you're going to be at 6, 7.25. The pricing on that is probably 1.25. So you don't have to get as much from the seller, and you can still get a rate down closer to 6.
Yeah, I think the 2-1 buy down is the most, I think that's the best that for this current market. And
it is,
I don't see any seller who's anti 2.5.
It might work on the 1-0 buy downs for somebody on a lower price house who's selling a $300,000 house that doesn't have a lot of equity in it. It would be easier for them to absorb 1 point of $3,000 some odd dollars than 2 points of $7,000. So some people in the lower price range, that 1-0 buy down it might be appealing to a young kid too, who's like, oh, my wife's on maternity leave or my husband's on paternity leave or whatever he is, and they're going to be going back to work. It'd be nice to us to save a couple $100 a month on this payment for a year. And then when they go back to work, it'll be comfortable for us.
Yeah. Can they do a 2-1 buy down for property, like let's say like a jumbo loan, like if someone's looking at a $2 million home?
No, it's only conventional loans under the 647 right now.
Oh, 647 price point.
Loan amount.
Okay.
Yeah. And that's going to be going up next year to 700-ish.
So what about jumbo loans? What do those people, I mean, obviously they have the money to buy a $2 million home, but I'm sure they want to save also.
I don't know. I mean, on one hand, it doesn't make sense. Why do they not offer it to everybody? But on the other hand, jumbo loans is offered by Fannie Mae and Freddie Mac. So it's a Fannie Mae, Freddie Mac, FHA, VA offering. It's not a jumbo offering. And the jumbo underwriters are tighter anyway than the conventional underwriters. And, those people have to qualify tighter, have to have more reserves, have to have better credit scores. Sure. So I just don't think that they're going to put that kind of loan in the market. Maybe the banks don't think that those people are looking for that kind of loan. Mm-hmm. But I mean, I don't care if I was buying a $2 million house, if I could afford it, if I could get 2% off on the rate, why would I not want to do it? But right now they just don't offer it.
Cool. All right. Well, thanks, Ken. It's always a pleasure.
No problem. You got anything you want me to talk about? I can talk.
I don't know. I think that's it. I mean, we did our 15 minutes. I'm sure you can go and go and go, but
Yep, I can give you something next time too.
All right, cool. Thanks, Ken.
All right, see it.
All right.